Today's video, we're going to be going over a couple of stocks that I think will do very well in 2021 and on, as well as a list of stocks that I'm watching for recovery in this crazy market. It seems like every day we're green, it's followed by a red day and vice versa. Today, we do see that we had a bit of a dip and the dark pools were buying, so that's always a great sign. Just know that when we're having those big dips, usually these big institutional investors are loading up. So I've just been scaling in, keeping cash, overnight always feels good, but scaling in on my favorite stocks and buying these dips, in waves and setting buy triggers. That's just the way I like to do it. So hope you guys enjoy the video. If you do, please like and subscribe, and let's get into it. So first up is a company that had a tough 2020 due to the pandemic, but as that subsides, travel picks up and things open back up, I see them doing very well in 2021 and beyond, and that is ticker symbol ABNB or Airbnb. And they're currently sitting around $187, which is a bit rich, most people would say. They pretty much IPO'd at a rich valuation. If you guys remember, they were supposed to IPO at $68 a share, but instead they went for $150 and have pretty much stayed at a rich valuation ever since. Now, the reason I like Airbnb is because I think they are a disruptor in the travel industry. And like I said, as things open back up, I see their business picking up heavily. So for those that don't know, Airbnb is a platform for individuals to rent out their primary or secondary residences as lodgings for travelers. It says here that renters typically seek accommodations with a homey feel that hotels cannot provide, while most hosts want to rent out their homes to supplement their income and make some extra money. The majority of Airbnb's revenue does come from service fees from bookings charged to both guests and hosts. So Airbnb is already bouncing back from 2020 quite a bit, and without even doing anything, their traffic levels are starting to pick back up. And it says here that traffic levels came back to 95% of the traffic levels of 2019 without any marketing spend. So that just goes to show how strong the Airbnb brand is. For their Q4 of 2020 results, $5.9 billion in gross bookings, which is up 31% year over year. 46.3 million in nights and experiences booked in Q4 of 2020, which is up 39%. They have a $3.4 trillion TAM, and by nature, the travel industry is worldwide. Everyone is traveling all over, and some people even live in Airbnbs. So if they can successfully disrupt the travel industry, this could be a massive opportunity. I really do think this is going to be a great long-term growth stock, and their $21 million in adjusted EBITDA in Q4 of 2020 is up 2% year over year. One more stat is that 54% of people either already booked or are currently planning to travel or expect to travel in 2021, which includes 57% of 18 to 29-year-olds and 60% of 30 to 49-year-olds. And we know that as the pandemic ends, people are going to be eager to travel and get out there. So I see traffic for Airbnb definitely picking up in this year and the years to come. Now getting into the bear side for Airbnb, this article says 3 reasons Airbnb stock probably won't make you rich. Basically, the first one just has to do with where they IPO'd at and their valuation. They give the example of Amazon and Netflix. You can do this with a lot of stocks though. Basically, where people had the opportunity to buy Amazon and Netflix gave them a ton of upside. If they just held over the years and built out their positions, those stocks really took off because of the opportunity people were given. Basically, where Airbnb IPO'd at just gives you less upside in the short term at least. Number 2, the competitive moat for Airbnb. This talks about how Google and Sabre have partnered to apply AI capabilities to travel booking, and this gives Google the ability to easily surpass Airbnb on utilizing collected data. Expedia bookings and Sabre and other travel companies have also become peers, so there is some competition in the industry, but I still think Airbnb's name has a lot of respect behind it. And then number 3, just the valuation, like we talked about. So they kind of mentioned that twice, but it's still talking about how their revenue has declined. And we also know that Airbnb is not yet profitable, so they're still working on that. But these are all things that I am taking into consideration and all things that need to be, talked about. Now hopping over to Investor Place to discuss the bullish side of things. So giving you both sides of Airbnb here. Basically talks about their strong management team. Started in 2008, they've proven to be an effective management team. They've been able to fend off a variety of competitors, and I do think that their Airbnb brand carries a lot of weight and respect behind it. And, when people are booking something other than a hotel, I believe the first thing most people think about is an Airbnb. I think they are the top dog in the travel sector. Point on here is the powerful business model. They talk about online marketplaces and how they often have that winner take all advantage, and that's because of the network effects. And as more people use that service, it becomes more valuable. Now, their examples are eBay and Alibaba. For me, the first company that came to mind was Uber, just because of the booking aspect of things. But it also talks about how Airbnb is dominant in that vacation home rental category. They have 5.6 million active listings, over 220 countries and regions. They have a strong brand. Like I said, a lot of people think of Airbnbs when booking travel that isn't a hotel. And because of that, over 90% of the company's traffic comes from sources that don't cost it anything, which is huge. And last up, they talk about the reopening, which we've already discussed, and we already discussed these numbers as well, but that's going to be a huge growth factor for Airbnb. So heading over to Twitter, I checked out Mukund Mohan's post. He has a great Twitter. Definitely go follow him. He does a lot of posts like this. He put together a spreadsheet showing different recovery plays like Expedia, Booking, and Airbnb. He compares them side by side. You have the stock price there. You have the revenue growth, the market cap, and obviously Airbnb, and most of these are actually down. This is from March 20th, so a couple days ago. So Airbnb is not 194 anymore. But a lot of people in the comments are saying Expedia looks cheaper. There's better plays out there, and I'm going to have to check out Expedia a bit more. But I do like Airbnb mainly because the brand name is so powerful. They have a great CEO and great team. And although it is a little bit rich right now, hopefully it comes down, because I do think that Airbnb will be the winner out of these in the long run. Now, I'm going to leave this up for you to take a screenshot, or I'll link it below. Go check it out. Let me know what you guys think. What would your pick be out of these three? So that's pretty much it for Airbnb. And while I do think the company is a big disruptor and a massive brand, I think it's a little bit overpriced right now. I think most people would agree, but I do see it as a great long-term investment. And I think they have a huge opportunity and growth ahead of them. Now, we do have a lockup period expiring sometime in Q2, so there'll likely be some fear in the market around that time, and maybe we will get a massive sell-off for Airbnb, and that's where I will add, I'm hopeful that it goes under $150 one day, maybe even less than that, and that's where I would really add. So right now I just have a small position, and I plan to add to it over time and dollar cost average down. But that's where I'm at with Airbnb so far. Next up, we're going to get into Palantir, and I did talk about them in the last video, but I do see a lot of upside given their current price. So on the month, they're down 22%, and on the week, down 5%. So this article talks about follow the money trail in Palantir stock, and how this is starting to look like a smart money play rather than a meme stock. Now, down here at the bottom, you can see as the NASDAQ topped on February 16th, Palantir was busy plunging by a much more significant 12.75% through lifetime channel support, and that loss was on top of a decline of roughly 27% from the stock's all-time high set in January, which, if you remember January, that was when they had the demo day, and we saw Palantir shoot up like crazy into the 40s. So, given their current price of $23.25, we have less risk now and more upside from here. I have been adding Palantir quite often lately. I really like it in the 23s, and I do hope it goes into the 21 and 22 range so I can really fully build out a great position for the long term and even add some options plays as well. So my main focus on Palantir is building out my long-term shares, position, but with the options, there's a lot of upside potential here. Just the way you can leverage your money and how oversold the stock is, the premium on these options is quite low. So leading up into that event, you could see a huge premium spike and make a lot of good money. So April is a bit of a lottery play in my opinion, given the current market sentiment and how volatile the market is. So if I were to play in April, that's a lottery play. I would probably do a spread just to protect myself from the up and downs in the market. But as you can see here, a 25 strike is only $100. Wherever you think this event could take the stock, these are somewhat cheap. Now, what I would like to do, a much safer play, is go out to January of 2022. These contracts really aren't that expensive for almost a year out. I know we're in March, so it's technically not a leaps anymore, But look at a 25 strike, only $570. Palantir is definitely, in my opinion, going to be well above this $25 price. And I do think that's a great option to pick. You can check the open interest on it, the volume, not too bad of implied volatility. So that's what I would do. But even, if you didn't have quite $570, I think even June is the next moderate risk one. And then May, May is really not that expensive either. $200 risk. You could see Palantir stock go way up by May. I think it's going to recover. I think the low 20s is where Palantir really likes to sit and bounce off of. So this is some things to think about. I like playing much safer. I like those far out expirations. I don't have to worry about it. But even something like May really isn't too bad either. So wrapping things up, some growth and tech stocks that I am keeping on watch every day for big upside upon a recovery. Lemonade, JMIA, Neo, Apple, Fubo, Chewy, CRISPR, TDOC, PSTH, Square, C Limited, and MP Materials. I think all of these have a lot of potential once things recover. So they're on a watch list right now, and that's what I am looking for. I think we are going to have a lot of great plays once we get things rolling again. So let me know what you're watching in the comments below. Please like and subscribe and have a good one.